Ready, go.
Okay, so I'm told this is part 3 of November 15th, Hosen stock bullshit. Okay. So Canadian Oil Sands produces about 40 million barrels a year. That's not, this is a little company, but the PE is 8 and the dividend is almost 6. And that's pretty damn good for a pure producer. Occidental pays about 2.5. Occidental has oil up the ass, and they've just made a big discovery in California, which they haven't even claimed credit for. So if I had to put an asset value, if I weren't totally ignorant, I would say Occidental, which is now 97, would be worth about $130 per share. If you could hold it over some period, it would be 130 plus yearly appreciation. Canadian Oil Sands, which is selling for a little over 20, I think basically could liquidate at 32. They could sell out they could sell out at 32, I feel sure, to Norway's Statoil or China Petrochemical or China Petroleum. I mean, I don't think they'd have any trouble. Nor, incidentally, would Occidental. I own a small position of Nexen, about 10 times earnings. I think they pay a nominal dividend. Seadrill. SDRL is the symbol. It trades in New York. It's the second largest deep water driller in the world. That is, they have the largest and newest deep water fleet. They pay an incredible dividend. I mean, drillers and oil service companies don't pay dividends. They never have. They never had any cash to pay a dividend. They always pissed it away on increasing capacity, and then there would be a collapse in oil price, and and the stock would go down 90%. And Rig, Transocean, like Seadrill, is basically a Norwegian company that has sought somewhere where they could pay less taxes than they would in Norway. So they're based in Switzerland now. They just seem to go around blowing up stuff, like the blowout in the Gulf. Seadrill seems to be cleverly financed. It pays, like 6.5%. I mean, dividends like that didn't exist in the past in the stock market, unless they were utilities or something like that. Seadrill, so I thought, how could they pay this humongous dividend and have the earnings they did? It sold at about 10 times, 11 times. And be based in Norway with its with extraordinarily high taxes. Well, they're not incorporated in Norway. They're incorporated in the Cayman Islands. So it's a smart company financially. So if this it's right around 35 now. I originally bought it at 23 a couple of years ago. But if it gets down to, I think this time I bought it at about 28, 29, then added some at 30. Yeah, at prices like that, this looks to me like an awfully good buy. And Oxy, like in the low 80s, and Canadian Oil Sands, I mean, it looks to me, unless there's something wrong, it looks like it's a buy at current price. There's a company called Xylem, X-Y-L. ITT announced a spin-off or a breakup. It was a conglomerate. They had a defense portion, a portion that made industrial components, and then they had one that dealt with water systems, water pumps, water conservation stuff, monitoring things, dedicated to helping customers make do with what is going to be an enormous water shortage. There already is in the world. Water, usable water, is already much more scarce than usable oil. So XYL sells for about 23.5 now. I would buy it now. I did buy it now. It just started trading a couple of weeks ago. Anything that has to do with water and is profitable is something that needs to be looked at. So it looks to me like the pro forma earnings. Pro forma means they go back, and since the three divisions were part of the same company, they kept one set of books. But if you break it down as though there were three separate companies, it looks like $1.70, $1.75 on a $23 stock. And this is a growth area. And I don't think there's many pure plays. Watts Water is more expensive. Pentair, I think, is more expensive. Okay. I have a view of the world as being headed for lower economic output, or at least lower economic growth, even counting the automatons that just grind it out in Asia. There's a guy named Jim Peterson who is the head of Wells Capital, based in Minneapolis. And he's a kind of laid-back guy, and he's on financial TV to be interviewed. And this jerk-off predicted 4% growth in the last quarter of 2008, when I predicted 0. And he's been predicting stuff since that occasionally has been right, but mostly has been altogether too optimistic. And why does he do this? It's because he likes to. That's his temperament. And my temperament is to see people as stupid as shit, and that they're going to fuck up the world economy, the people who are connected with it. And it doesn't matter what view he has of the world, and it doesn't matter what kind of temperament I have. Neither one of us know shit about what's going to happen. But one thing I do hear is that banks are not going to ever be the same as they were. So when you hear people talk about normalized bank earnings, this is shit. I mean, we don't have any idea whether these companies will exist in the future. And they certainly are not going to be making mortgage loans. And they don't seem to be particularly interested in taking deposits and lending it out, which is what banks are for. So, the spreads on loans are not particularly good now. And so who would buy a bank? Well, what about a company that can buy mortgage loans that exist at big discounts? Well, the problem that we've had the last 3 years is that the political process has blocked the clearing of the property markets. The Obama administration fucks up everything it does. And so banks are sitting there holding loans that are worth less than they're marking on the books. So we don't know what banks are worth. But if you could buy a loan at 50 cents on the real dollar's worth, then you could hold it until some of this worth was realized. That's what value investing is about. So it hasn't happened much in the last 3 years because nobody who's holding a bad loan has to get rid of it. And that's particularly true in Europe. It's clear now that all the European banks are insolvent. That if the governments weren't standing behind them, there would be a run on one European bank, particularly a French bank. I think they're in the worst shape, but the German banks too. If there was a run, then there would be a run on all the banks, and all the banks in Europe would have to close. See, the problem is what they own is not worth what they say it's worth. And we have a tension in Europe and in the United States, and in other places too, between people with a sense of entitlement. People feel like they ought to earn high wages in Europe for work that, by normal standards, is not very productive. And the banks and the governments believe they should be able to conduct their business without doing it well. So it's a tension between the fuckers and the fuckies. We don't know which is which because they haven't been resolved yet. So the banks in the U.S. are the fuckers. They got bailed out. They got supported. They would have all failed. They would have failed in 2008, the first hour after Lehman.